This is your LMAX exchange technical update for Tuesday, August 30th, 2016. Euro dollar. So not much going on in the euro on Monday trade, but overall the market has been consolidating recent declines, and there is risk for additional setbacks towards the 109 area. At this point, it would take a rally back above 114.28, that 24th of June high, to really negate the immediate downside pressure, and overall this market is still trending lower. Again, back above 14.28, some critical medium-term resistance would be required to take the pressure off the downside. Until then, any rally should be well capped in favor of that next downside extension towards 109. Sterling dollar. So cable looks to be rolling back over after correcting in recent trade, and there's risk for additional declines and for an extension below the recent plus 30-year low that we saw back in July and down towards the 125 area. At this point, it would take a break back above 33.72 to take the immediate pressure off the downside. Dollar yen. So dollar yen remains confined to a well-defined downtrend, and the market now looks to be in the process of seeking out that next lower top ahead of a fresh downside extension below the recent lows that we saw, those 2016 and multi-month lows at 98.99, and towards next key psychological barriers at 95 further down. Euro Swiss. So Euro Swiss has seen a little bit of a bid in recent trade, but the market continues to be confined to a broader range trade, with rallies seen very well capped up towards 110. At this point, look for the market to stall out ahead of 110 in favor of the next downside extension towards the range lows in the 108 area. Aussie dollar. So Aussie has seen the market top out in recent trade after trying to trade up to the 2016 highs but stalling at 77.58. Look for the market to now trade deeper setbacks ahead towards the 74 area, with any rally seen well capped. Only back above 77.58 would negate this bearish bias. Dollar CAD. So dollar CAD seems to be in the process of carving a more significant medium-term base, with a higher low now started at 27.64 above 26.55 in favor of the next upside extension beyond that recent high that we saw at 132.54. Kiwi dollar. So Kiwi is stalled out in recent trade at 2016 highs of 73.81, and it looks like the market could be in the process of rolling over after continuing to show signs of stalling out above 73. Look for deeper setbacks over the coming sessions back towards key medium-term support at 69.52. Only a break back above 73.81 would compromise this outlook. SPX 500. The S&P 500 is trading just off record highs, but it looks like it's slowly wanting to carve out some form of a top. This will be confirmed on a break below critical support, which now comes in at 21.47 in the form of that low that we saw back on the 2nd of August. Back above the recent record highs, just shy of 2200, would open the door for a push above 2200 and suggest that the market uptrend is still well intact. Gold. So gold has seen some setbacks in recent trade towards 1300, but ultimately this is a market that's seeing a broader basing structure taking place, with a highly constructive outlook now favoring a higher low in the 1300 area ahead of the next upside extension, major upside extension beyond 1375 and towards 1450 further up. At this point, only back below 1300 would negate or compromise this bullish outlook for gold.